Many people have been talking about what's kind of happening in the market, and some folks are looking at sort of the forecasting methodologies to start understanding of not just what's happening right now, but what right now happening means in a future. And when I say future, I don't necessarily mean like tomorrow per se, but I do mean, looking at few months or even few years ahead of the schedule to sort of start looking at the big picture. Some people call it that macro, looking at sort of the directions and strategies of what makes sense. And I have been more focused on the sort of the big picture, kind of the direction, overall direction that I think that the economy, the world, the finance, the investing world, sort of the ability to protect our wealth makes sense. And that's kind of what I want to spend time in this particular video talking about, where I think there's going to be some amazing opportunities. And that's really what I want to focus on and kind of explain to you a little bit as to why I think what I think. So there's a book by Harry Dent that he written quite a few years ago. I believe it's called A Sale of a Lifetime. And that's kind of what really came to my head this morning as I woke up and started thinking about additional pieces based off of some research and just looking at kind of what things are happening, what has happened in the past, where we might be heading based off of demographics, based off of the economy, based off of current events, both locally and globally. And really the best way, I gotta give it to him, he has had a fantastic title for that, to call it A Sale of a Lifetime. And as I'm calling it, it's coming to a town near you. So hi everybody, my name is Nev Kraguljevic of One Deal Away, and that's really what I want to talk about. Every time that there is a crash, that there's a downside, there's always an upside to it. And I believe that our job as sort of stewards of our own wealth, that our job is to not just sort of look at the disaster component of it and sort of freak out and worry about it. Our job really is to look at what benefits potentially exist and how do we position ourselves best to sort of do extremely well over a lifetime. Now, I want to start off by saying that I'm incredibly risk averse. I do believe that risk is everywhere. You can't avoid it, but our job should be to minimize it at all costs. I also believe that when analyzing the investments and opportunities within markets to preserve our wealth as well as grow it, also comes as sort of this ability to understand what is the worst case scenario risk and what is the upside. And so if I can find investment vehicles and opportunities where I can lower my risk, lower my downside exposure, right, to limit as far as how much my loss can be, and position myself in a way where that is limited, there's only so far down that it can go, but I can expose myself to this huge potential of what could happen that will sort of bring my wealth up to the next level, and of course protect it along the way. I will absolutely join in and jump in on that opportunity, and that's exactly what I want to talk to you about today. So behind me you'll see some graphs and sort of some of the things that I have put in, and so now I actually want to jump in, and so let's start talking about it. So I've done a little bit of pre-drawing so that I can just kind of go in and explain. It sort of helps you and helps me figure out of like what is this next direction that we're going to go in, that we're going to talk about. So right over here we have basically a stock market. This is what the stock market has done over the past few years, right? So there's the price over here, this is the time, and as you can see it was kind of going up, right? And then it came right over here is sort of the February of 2020, right? So that's kind of where we were. It was the top of it. That was the mid-February for just most markets. That's kind of what happened. And there was a bit of a slowdown sort of happening. There have been cracks in the system that we could see. Some of the cracks were the sort of the trade policy stuff, right? The trade wars. Some of the other cracks were the repo market and the lack of liquidity in it. Some of the cracks were that there was debt that was sort of really growing at unsustainable pace. So there have been cracks along the ways, and really we have been exposed to a lot of that as early as 2005, 6, 7, 8, 9, kind of when we went from the super high and kind of crashed due to the uh, subprime mortgage crisis, and so that was a little bit different than what's happening right now. But there were definitely some cracks there that was sort of papered over, if you would, and kind of covered up, sort of, we duct taped the whole thing together and pushed it back into the sea, and it's been doing pretty well. We have been in a bull market for about 12 years roughly. And it was, the gains have been ridiculous, and it wasn't because the economic progress was high, because if we look at the income levels of kind of what has happened, that has mostly stayed stagnant. And it wasn't completely stagnant, like it was going up, but it wasn't going up at a high of a pace that some of the assets were. And the reason that the assets were sort of experiencing this high inflation is because there was this giant amount of liquidity that was entering that market, and it had to go somewhere. So it wasn't going into building large industries, it wasn't going into the employment stuff. Some of it did go into real estate, but a lot of it, which I would argue is assets, but a lot of it actually went into pushing paper assets, pushing the stocks higher. So a lot of the companies had received basically free money for all intents and purposes that they could do whatever they wanted with. And the hope was that there was going to be this trickle-down economy piece that never really happened. What they ended up doing is they would buy back their own shares of stock, which would raise the price of the stock up. It would eliminate the number of the outstanding shares, and they would basically use that money to pay themselves and to pay the executives. That's kind of what's been happening. So they would take money, they would borrow it, basically, dirt cheap to like nothing, buy their own stock, go in, pull the cash out, and really kind of rinse and repeat that cycle. That's, for the most part, what I believe that has driven this kind of to go up. We all expected that there was going to be a crisis. I don't know that if anybody could have predicted that it would be a pandemic, but that's kind of what ended up basically halting this stuff. Since then, in about 1 month period, we have gone down, and we have dropped roughly, 30%. It's a little bit more than 30% now. But that's kind of what has happened, that we have had a drop of about 30% in just 1 month. That is huge. That has, the drops, right? So when the market kind of goes up, it goes up really slowly. When it drops really fast. And typically we see sort of this 18-month, roughly speaking, 12 to 24, but 18-month, roughly speaking, that is sort of this like super fast phase of everything unraveling. So we've been in a bull market for about 12 years, and we've all kind of expected that it's going to come down. And, I have been expecting that it's going to come in unprecedented crash. A lot of people have been talking about it. If you have been following any of the markets, any of the talk shows, any of the stuff, or you have any experience kind of looking historical components and studying what is most likely to happen, you've been expecting it. Harry Dent is also one of the people that has been talking about it. And it's because there's a lot of culmination kind of happening all at the same time. But here's kind of where we are. So we really dropped, and we've never experienced this big of a drop in this short period of time. Typically when the markets drop in the down cycles, they will drop over the course of about 18 months. And when they do that, they will drop, the 30 to 50%. We have been in this for only 1 month, and we've already dropped a little bit over 30%, which makes me believe that this is going to be probably one of the worst crashes of the stock market, but also that will bring up a sale of a lifetime, right? The opportunity of a lifetime that is coming our way. So this is part of the problem, that it has been over leveraged, overextended, it wasn't sustainable, and the way that it has gone up has been mostly through manipulation and sort of fake economic data. Part of it is when you evaluate a lot of the companies and the stocks, and you look at the PE ratio, like all of it was unsustainably high, that it just didn't make sense. And so I have been actually out of the market, out of the long positions in stocks for a very long time, and haven't been participating in the 401k or any of the stuff. And everybody, including my accountant, have been making fun of me and thinking that I'm absolutely insane for not doing it. But I didn't do it because I didn't know when exactly it's going to hit, and I knew it was going to hit. So I have hedged my investments in different industries and different holdings. So I wasn't holding out by not participating in it. I just chose not to participate in this per se. So my holdings were in income producing real estate, a little bit in precious metals, a little bit in private equities, meaning private investment in stocks, but it's not like publicly traded, so you can't trade it. It's just that's a sort of like a long-term unicorn position thing happening, and of course Bitcoin. So that's kind of where my things were. Now that we're actually in crash, I have entered the market, and I am playing a little bit with the paper assets. I'm playing with it on the downside, and I've entered roughly right around the time when we kind of hit the peak, and so I think my timing was fabulous, but only time will tell whether I did it right or not, right? It's sort of hard to tell whether you're doing the right thing right in a moment as things are kind of happening and things are moving so quickly. But my vision of what I think was going to happen has been so clear that I decided to really move into that direction, and I am even more convinced now than I was in the past that that decision is correct. So I'm going to keep course, and in this video I'm going to share with you sort of what that course is and what my thoughts are around it. So this is kind of where the past was, right? Now we've hit this sort of point right here where we are today, which is today is 320. It's actually 322.20. So there we go. That's today's date, so you kind of can understand of what I'm talking about. And so now we have this future that nobody knows what exactly is going to happen. As I have mentioned, that I have no clue exactly how it's going to play out, but here's kind of what I'm thinking. Here we are today. So what do we know about today? We know that we are at zero interest, okay? Zero interest rates. We know that there is large amounts of stimulus, okay? I'm going to put it that way. So those are the things that we know. We know that there is a high cost of medical plus aging population. Okay, those are the things that we know. We also know that when it comes to, and let me erase a little bit of this so that I have space. Okay, so here's the things we know. Zero interest rates, a large amount of stimulus, we're talking trillions of dollars, very expensive medical costs, and this is important because we're talking about medical crisis right now, the pandemic, right? So the medical bills kind of have to go to the roof. We have an aging population, which this is affecting a lot, and a lot of them are looking to enter retirement, which is going to draw down even more on the market, and I'll explain about that a little bit later. We also know that the young population has huge amount of student loan debt. Those are the facts. Those are the things that we absolutely know. And so I'm looking at this stuff. It's been fake. We're coming in over here, going down. So what do I think is going to happen next? Because of all these things that I have mentioned, I think what's going to happen, mostly driven by this stuff, the next thing that I think is going to happen is that we're going to go in a little bit of the upside fake out. I'm going to call it a fake out because it's not going to be a real coming back into the terms, because we haven't dropped low enough. Now, for you watching this, you're going like, I'm looking at my portfolio. What are you talking about? We haven't dropped enough. I've lost well over 30% of my wealth. I don't think that that's it. I don't think that that's the whole story. This is just the beginning. This is just a 1 month out of a roughly 18 plus month period that I think is coming. I actually think it might be longer than just 18 months, but again, I don't know, and I don't want to put a timeline on it. So I think we're going to see a little bit of sort of the upscale component that is sort of going to climb up to a certain level. Once it hits a certain level, then I think we're going to go back down into a real crash that is going to continue for a substantial amount of time. We're never going to recover this full 30%, but I think it's going to recover a little bit if the interest rate kind of continues to stay at the same level, or they end up dropping it, which I think is going to be a real thing, and the even higher level of stimulus that is going to come in. Now, the reason that I think that this is going to drop, aside from the fact that it's been a sort of like a fake bull and stuff, has a lot to do with the aging population. So aging population tends to retire. When they retire, they tend to sell, not buy stuff, all right? So now they're selling stuff that is inside their balance sheet. If you know anything about personal finance, you have something like this, which is your income and expenses. This is the income statement. And then you have something that looks like this, which is going to be assets, liabilities, and equity, which is basically what you own. So this is what you have, what you owe, what you own, what's actually yours. This is known as the balance sheet. A lot of the people are basically, this component right here is hitting their asset column, or so they think. I actually think there's a lot of liabilities. But anyways, in order for them to get cash, they have to dispose of this component, which is going to drive money into their income statement so that they can take care of their expenses, right? So that's kind of what ends up happening. But the problem is that once you start drawing out of the asset column, you start losing the assets. When you start losing the assets, you eventually run out of things to sell. When you run out of things to sell, now what? That's the part where you have to depend on the government to pay you, which they can't afford to do that, or you have to go back to work, which is going to be nearly impossible, because I think that because of all of this crash, because of a lot of the employers having to close the doors and do layoffs, there's really not going to be much of a job at all. This is the reason why I believe that the stimulus that I've talked about is going to continue, because they have to. They will have to pay every single one of us on a continuous basis. And so that universal income that you have heard people talk about and sort of throw out and sort of see if that would make sense, I think that that is going to become a reality for at least a short period of time. I don't know if it's going to be forever, but I can see it coming for these very reasons. Now, we have aging population. Their medical bills are going to be going through the roof. So I can see a lot of people, unless the policies and laws change dramatically and drastically, I can see a lot of people going in for bankruptcies because they won't be able to pay those medical bills. Then we have a young population that is settled with a large amount of student loan debt, that doesn't really have any savings, and now is settled with the parents and grandparents that they kind of have to figure out a way to support it, so they won't be able to buy the assets that are kind of coming in, which is why I believe that this is going to draw things down even more. Now, let's talk a little bit about the credit and sort of the borrowing, kind of what's been happening. So as I mentioned, people have been borrowing a lot of money, personal, commercial, people have been, right, like the banks, the businesses, the individuals, the countries, like everybody has been borrowing like crazy, and kind of has been going up, which is why you've been hearing a lot about this sort of large debt and uncertainties and that kind of stuff. And this is kind of like nowish where we are, where you see the line right here. Where I think this is going to happen is that now we're entering the phase of deleverage. So I think that the leverage is happening is because while the banks are kind of saying, oh, low interest loans and stuff, like that's great, but that's, yet at some point you're going to have to pay it off. So people are starting to freak out, and rightfully so. And I think that while the lending is going to exist, the borrowing is not going to be there. That's why I'm expecting that the rates are actually going to continue going down, because banks basically make money when they lend. That's how they make money. They don't make money when we put money in the savings account or put the checking. Like that's just sort of like a side bonus that they can trade with. They make money when we borrow. Because of all the stuff that is happening with the stock market, with the economy, everything kind of slowing down, some of the businesses might be forced to borrow short term. That's going to keep sort of the rates at, relatively speaking, sort of constant pace. I've also heard and seen some reports that some banks are actually starting to jack up mortgage rates, which is ridiculous. So I don't recommend actually going and borrowing money at all now if you can help it. Where I think things is going to go is that I think that the lending rates are going to drop even further down, because once they run out of people who have to borrow for emergencies, there's going to be freeze in sort of the desire for it. And when the demand is super low and the supply is high, the prices go down. They have to. It's just that's the basic economics 101. So I think that we're going to be seeing much more favorable loans, much lower borrowing rates. I think there's going to be a huge flexibility from the banks as far as what we are able to do, but that's not going to happen right now. That's going to take a little bit of time before that happens. So most of it, things are going to deleverage. And what I think is happening, because of all of the stuff that I've shared here, all of the stuff that you see here, all of the stuff that you see here, we're definitely in a recession, even though they can't call it. And I actually think that long term, we are entering depression. And a lot of people have actually talked about that as well. So I might be reiterating what you have been hearing from folks. I think that this is where we are for sure. This is where we sort of are heading. That's just kind of what I think. So over here, or and depression is basically a same name as a deflation. It's sort of a you have two forces when it comes to money. Inflation basically reduces the amount of debt. Deflation, or not reduces, inflation eats at the debt, eats at our money, which is that. Deflation makes it sort of seem much, much stronger. And when I say money, I'm meaning mostly currency. So this is the reason why I put these things over here together, because I have been very big about talking about what happens in inflation. You might have heard some of the other people talk about what happens in inflation, but there's not a whole lot of information of what happens in deflation. The latest deflationary period, and it was a really bad deflation, it was the Depression of the 20s or 1920s. 1929 was the Great Depression that, people have studied probably in business schools, in economics, read in a paper, heard on the news, whatever, right? So that was the latest one. So we are 90 years, 91 years sort of since that has happened. But I think that that's kind of where we're heading in the near future, pending that not major things shift. So as is, right? Like all things being equal, as they like to say in economy, that's kind of where I think we're hitting. So this is the sort of the piece that I think we're coming down to. And so now the question kind of comes in of what performs really well during which period. So up until this point, we have been experiencing inflation. And in inflation period, leverage and credit, that's basically the same thing, right? Just different name for it, has been working really, really well, because that's using debt, okay? So that's using debt, and what ends up happening is that debt gets basically eaten by the inflation. It sort of destroys it slowly over time. That's what inflation does, and that's why your cash is not working really well in inflation periods, is because cash or fiat currencies are debt. They're borrowed into the existence, which is why the inflation actually eats the power of your cash, making it worth less and less. Central banks really like the inflation because it forces us, because the money ends up actually being valued less and less, it forces us to go out and spend it. And that's what's been driving a lot of our economy. That's why you'll hear that it's consumer-driven economy, is because due to inflation, we know that our money buys less and less. And if you kind of follow the purchasing power of the dollar over the decades, you will notice that, years ago when we kind of entered this new system, this is that sort of Bretton Woods, where we got off the gold standard and we became a full-fledged fiat currency, that the purchasing power of the dollar has been kind of steadily going down, and we're sort of hitting this like last stages of it. Okay, that's why they really like inflation, and it's easier to fight it because all you got to do is just borrow more, aka print more, and it's pretty simple to kind of keep up with it, right? Simple enough. Deflation, on the other hand, is basically like, if you were thinking inflation, right? Like, what does it say? It says inflate. So imagine a balloon and it just kind of grows bigger and bigger, right? Well, what happens when you deflate that balloon sort of gently? It kind of starts going like this, right? And it starts becoming smaller and smaller. That's sort of what happens in deflation when it comes to our money. It sort of starts shrinking down slowly. Now, it typically doesn't shrink out that slowly because, as you can see kind of right down here, it's almost like you have this giant balloon, somebody pins it and it just goes boom, right? And it just kind of goes down, and that's that. That's kind of what we're experiencing, and deflation is a bit harder to battle because in deflation, cash does really well. Okay, cash actually starts getting a higher purchasing power. So when we talked about the dollar, when you look at it over the over the ages of kind of when we got off the gold standard, it's sort of that it was kind of going down. When we hit the deflation period is when actually the purchasing power of that dollar starts going up. This is why every time in a recession or deflation, cash is actually that's why I call it cash is the king, right? Here, cash is trash. Here, cash is king. Okay, maybe that's an easier way for you to remember because you've likely heard both terms and you're like, they're two different things. Which one do I go with? Well, it depends on which season we're in, y'all. Okay, so it's kind of like, winter boots. In winter, they're awesome. In summer, you're like, forget it, man. I'm not putting it on. I'm going barefoot. It's too hot. Same thing with cash, okay? So that's one thing, so in deflation. The second thing that does incredibly well during the deflation period, and when I say incredibly well, I'm talking incredibly well comparing to everything else. Because you got to compare things, like compare to what? Compare to everything else. Bonds do really, really well. They actually end up going into the even stronger bull market because even though the yields might fall, and the yields are falling because of the interest rate going, not going, we are at zero, and I don't think they're going to be able to raise it anytime soon, right? And if anything happens with interest rates, I think we're going to go negative, and I think that that's a very realistic possibility and probability because I don't work in certainties because it's hard when you're looking at the future. There's no way to be certain. So I work in probabilities and possibilities, and so what likely or more likely scenarios are or are not. So I don't see us raising rates anytime soon, and I also see it very hard to keep it at zero. It's going to have to go negative. President Trump is pushing for it to go negative, so I don't think we're going to have much of an option but to go negative with interest rates. All of those things combined, the probability, okay, the fact that everything has crashed, the facts that we have here, and the probability that we're going into inflation and that we are here, we just can't call it quite yet, legally speaking, technically speaking, bonds will do really, really well. Where the yields might drop, the price of it will go up. So people might not necessarily be enjoying the bonds because they're saying, well, the yield is going down. Well, yes, but here is the thing. Compare the yield of, 1-2% or even 0.5%, which is not a great yield. We can all agree to that, okay? But when you compare some yield and ability to kind of have cash at some point, worst case scenario, right? Or you are in equities that are just sort of going down, going bankrupt, disappearing. Between the two scenarios, I would prefer to get my cash back, even if it is just yielding 0.5% or 1% or 2%, because over the period of time, worst case scenarios, at least I get my money back, okay? So that's reason number one. Reason number two is that when the yields go down, the price actually goes up. So at some point, I think that the vast majority of people will switch to bonds, at which point, down the line, if things go actually a little bit better than what I think it might, you can sell it and make money off of the price that you sell it at. That's sort of where the reason that I'm saying bonds. The second reason is that when we studied the Great Depression, sort of the last depression that we had that I have just mentioned a little while ago, of the 1929, what has actually performed really well, the people that have financially done really well, which is not a whole lot of people, but a very, very few people. Cash was, of course, one of them, and then bonds. And when I say bonds, I am talking U.S. Treasuries, right? So the notes, the Treasuries, and the 30-year bonds, right? So the government bonds, and some high yield investment, not high yield, sorry, some investment grade corporate bonds. Very, very few. High yield is typically the junk stuff that doesn't work really well. It has a lot of systematic risk that is part of it. And so that's kind of where the problem is. That actually brings it into there's a lot of problems when it comes to the pensions and retirements and all of these different things, but I'm going to be covering that in the next video. So if you're interested, if you are of that age, if you know somebody of that age, like your parents or grandparents or like your boss or neighbor, that's going to be a video that we're going to cover some of these things where I think some of the bigger problems are also kind of coming in that are supporting some of the theories that I'm talking about here. Now, I have talked about sort of sharing the sale of a lifetime, and I've sort of done this to kind of set up the stage of where we sort of are and what works the best or not. I'm going to clear this so we have space to work, and then we're going to get to business of like what is actually going to be on sale. All right, clean slate. Let's get to work. So, what is going to be on the sale? Well, everything, right? Or just about everything. So, those that actually can preserve their money. So, what you want to do, the number one thing is you want to preserve wealth, okay? That should be the number one goal right now that you want to play. And we're going to do that by cash and bonds, okay? And we've already talked about sort of what cash, what bonds. Those are the things that I think are going to do incredibly well. And here's the worst case scenario. Again, we have to compare the sort of the upside with the downside. What is the downside of having cash? Well, inflation. I'm sorry we're not hitting it right now, and you know, it's one of those things that I think is going to come, but it's not quite here yet. So worst case scenario, if that switches, you can always get into whatever asset, you can buy just about anything. So there's a lot of benefit of having cash, and if you look at some of the smartest money, some of the biggest investors, all of them have been sitting in cash and are sitting in cash right now. That should tell you something, that should send some signals, okay? Everything has a reason, everything is a signal. The second thing is the bonds, which is basically cash equivalents. That's kind of what they call it. And what it does is sort of a guaranteed by the government who will continue to print because they have to print, right? They absolutely have to print in order to support it based off of everything that is happening that we're talking about. The second thing that is going to sort of go in is look for opportunities to grow your money, opportunities to grow your wealth. So there's definitely some opportunities that exist right now that I absolutely like. And one of those things is going to be, of course, income producing real estate, okay? But that is if you already own it, okay? That's not something that I recommend anybody buy right now, although I don't make recommendations whatsoever. You can do whatever you want. It's just not something that I would do right now. So if you own it, awesome. If you don't, right now is a good time to study and get ready for it because sale of a lifetime is coming, okay? So that's why you want to do this piece over here, all right? So that's one of the things. The second one that I actually think is going to be really huge is going to be Bitcoin. And the reason for it is that, and I will actually do a special, another sort of special video on just Bitcoin to kind of explain why I believe this. But in a big sort of picture, I think that we are coming to a new fiscal system, new financial system, because the current one has a lot of cracks, a lot of problems. Everybody knows it, which didn't know necessarily how to fix it. Some of the smartest minds and brains from all kinds of different industries are entering the crypto markets, and this is sort of the first, the biggest, the most decentralized, and a lot of people are doing a lot of stuff with it. There are governments all over the world that are going in, developing their own cryptocurrencies. Large corporations, like everybody is on this train, and so I think that this is well poised to blow up. And like I said, I will do a video that I will talk even more about why I believe Bitcoin is a really great sort of protection kind of piece, where opportunities to make money that you can actually participate right now. The third component over here is being able to get into some precious metals. Precious metals don't typically do incredibly well during the inflation, but they are sort of the, especially like when we talk about gold, it's gold and silver. When I talk about precious metals, I'm talking about physical stuff, not necessarily just paper. Number one, a lot of central banks are actually buying and holding, especially gold. And you know, there's a reason for that, because if all else fails, if all else sort of implodes, it's sort of this, in a way, global currency that you can take a gold coin anywhere in the world and it will be accepted anywhere in the world. So it is sort of this universal ability to trade and to hold on to and to kind of be able to sort of survive and kind of preserve your wealth. It doesn't do incredibly well during the deflation, but it does incredibly well during the inflation. And so that's sort of like having some of that is never like a bad thing in my mind. But there's downsides with it, right? Like it doesn't pay dividends and any of that stuff, which not all of these things do. Like cash doesn't pay you any dividends, but it's good to have some cash. So same thing with the precious metals, doesn't pay any dividends, but it's good to have some of it. And I think that this is going to be fantastic to own in a little while. The problem is that in a little while, you might not be able to get it. So if you're able to get some now, it will be actually a really good thing. And the reason I say that it might be good in a little while is that while I do think we're kind of hitting this depression, I think that we have learned a lot from the Great Depression back in the 1920s into 1930s. And so what we're seeing right now from the central banks sort of pumping all of the money in left and right consistently, sending cash to the residents, to the citizens all over the world, all of that stuff kind of happening, is to attempt to prevent it, or at least make it smaller and slow it down. That's the reason why all of this stuff is happening, because if we grind to the halt, it will definitely hit, and we're not coming out of it for like decades. That is the biggest fear that the central banks and the government leaders have, and that's the reason why they're printing money and sending it out there, okay? Because of all of that kind of coming in, and because they will probably send much smaller version at first, but when they see that that's not necessarily doing much of what they thought it would, they're going to actually start sending more and more and more, faster and faster and faster. And at some point, we might actually hit this accumulation piece where we might hit right back, kind of go into the depression, sort of hit it, and then kind of take off. It's kind of like if you've ever, had like a flat rock and you go into the lake and you sort of chuck it and it kind of like hits and flies, right? So it's going to be like that, where it's, if the rock is sort of the analogy for the economy, kind of what's happening with the money and stuff, it will sort of come in, and the lake is depression will sort of hit it. It will definitely scrape it, it will definitely hurt, and then I think it will bounce and go kind of into the inflation period, which is where I think that having some precious metal is going to be incredibly amazing thing, and it might turn from just a safety net into sort of like an investment that is fabulous. This one, very similar thing along those lines. These, if you own it, that's where they're going to come in super handy. And then, of course, cash is going to be cool, because once we kind of hit that lake, hit that sort of depression thing, that's where things go on sale. You can quickly put in things, grab it, and then as we enter this sort of bigger inflation piece, you'll be able to ride this next wave that is coming our way. So it's sort of like we're kind of coming down here, and then we're going to be hitting the next wave. So that's another one. Let's see, we have cash and bonds, we have the real estate and Bitcoin, the precious metals, and then the final piece that this is sort of probably out of all of these these are also like on the risk base, and I would sort of put these two at the same level of risk. This is probably going to be the potential riskiest of them all, is going to be the volatility. So volatility, because we're experiencing this sort of up and down, I think volatility is going to continue to play out, and very much like bonds are sort of set up to do incredibly well and kind of hit this like amazing run where you're going to be able to preserve a lot of cash. This is a much riskier option, but it does have an ability to provide some great returns. If I was to sort of put these four into kind of categories of how to split, or how I am splitting, how I'm considering of sort of splitting, is that this will be like 5% or less, probably. Like, it's a very small portion. This is like only a little bit of money that, like, if you lost it, it's okay. But if it hits it big, like, you're going to, we're talking like 20, 40, 50, 100x your money. The returns on this could be absolutely insane, but you could also lose it all. That's why it's a highly risk potential that I don't know is for everybody, but some people, really want to go and play. So that's just one of the sort of really play things. That's like a casino. That's like, really sort of a long shot out in the left field. If it happens, cool, but don't count on it. This is sort of more of the safer piece, this one and this one. And, this is something that I feel pretty safe and solid. Bitcoin is still pretty volatile, and it has ability to kind of lose some of the wealth when you buy it. And so paying attention to kind of the price and price fluctuation makes sense. This, if you already own it, you probably understand it. So I'm going to just kind of jump over and skip it. And so if you haven't done much of these things at all, or you are not as the risk is just sort of like something you cannot handle at all whatsoever, having cash is probably like the easiest simple thing to do. So that's kind of where we are right now, of what I think makes sense in this very moment. And I'm doing this, as I have mentioned, it's March 22nd, 2020 when I am doing this video. So that's sort of when I say now, I really mean kind of like now. Right, so now we're going to talk about sort of sale of a lifetime. So we've seen stocks, okay, are going to basically do something like this, okay, and they're going to come in and sort of hit some sort of bottom. That's going to also happen with real estate. That's going to happen with, like just about any sort of the private businesses. Those that actually will remain. So I think we will see price of just about everything kind of come to these like super low levels that at that point would make a lot of sense to kind of come in. That's, I don't have necessarily like a timeline for it exactly, but I think we'll sort of you know it when you see it, which I know really sounds horrible to say, but people have been already asking, like, do I go into real estate right now? And I love real estate. I believe in real estate, but I don't know that right now buying it makes a lot of sense, even though I know a lot of people will. I'm not necessarily going into it right this moment. I am sort of holding out for the moment, but I'm spending time learning and continuing my education and learning as much as possible. So if you want to do anything in this very moment, aside from what we just talked about a few seconds ago, get into the education, start learning more about stuff, start accumulating cash, and get into education. That's probably the best thing that you can do. And if you're liking these videos, please do subscribe. I'm gonna keep on doing these things. If you want to go more into depth of like learning how to do some of the stuff with evaluations and with real estate investing, kind of some of the most amazing opportunities that are just coming our way that are going to blow your mind, I invite you to check out the links below and sign up for the courses. They are super affordable, and I think they offer an incredible amount of wealth and knowledge that is going to serve you for a lifetime, not just sort of to thrive in this particular economic status, but for everything that is coming our way. So we're gonna hit over here, and so what's gonna end up happening is these are gonna be like super low prices. So something that has cost like, $1,000 a share might be for like as low as like $1. And I know that that sounds ridiculous when I say it out loud right now, but that's kind of what I really think we are heading into. And so people that have, right, so there's going to be my people, there's my people that actually have cash, they're going to be able to go in, jump in, and buy this stuff because, as I've mentioned, once we sort of hit this lake, so to speak, it's going to start going up. And it probably won't go up like this. It will probably go something like this, right? Depending on the different curves, but it's going to go up, and they're going to be able to get some amazing stuff that is going to serve them incredibly well into the future. I think that's going to happen with stocks, with private businesses, because we have an aging population. More and more people that are elderly have built incredible businesses. They're going to be selling them in the near future, especially those that survive and potentially even thrive during these economic crises. If you have been doing anything with it, it's just exhausting. And so I can only imagine being a business owner trying to kind of work through it. And even if it's highly profitable, that's amazing, but it's just exhausting. At the end of this stuff, people are just going to be tired. Those successful businesses, so unsuccessful businesses are going to shake down, they're going to disappear. Successful businesses are going to make a lot of money, and those business owners are going to say, I'm done, I'm out. They're going to want to go out and want to sell their businesses. The problem is that vast majority of people won't have money to be able to buy those, so they will sell them probably at deep discounts. You might even be able to get like a seller carryback, right? Seller owner financing, seller financing, that kind of stuff. We're going to see that with private businesses of all sizes, shapes, and forms. We're going to probably see that with real estate and all of that stuff, and that is going to be a time when you want to buy. So right now, what you want to do is accumulate as much cash as you humanly possibly can, and then once we start seeing those things, that's when you're going to actually go in. And for all of my students, so if you sign up for my classes, I will actually I end up doing sort of a special private videos and lessons and kind of coaching for my students that I release to them before I release to anybody else. It's sort of like my thanks for being in my sort of like a insider circle, or like, right, because I value the customers, clients, and students that I have, and so I want to do something extra above and beyond of what anybody does, and that's just sort of the sort of like my way of saying thanks, sort of like an added bonus that you just don't get otherwise. So these videos will still come out, but the detail of what they get versus what comes out in these public things is very, very different. So that's kind of what I think things are going to happen, and you'll be able to go in and buy properties that let's say properties right now that are worth like 1.5 million are likely, especially if we hit the depression, going to drop down to like 200,000. I'm not saying this will definitely happen, but I have seen, and sort of studying and seeing some of these insane drops when money kind of dries up and it becomes highly, highly, highly valuable. The asset prices of everything really drop down, and we're able to go in and do some incredible things when it comes to wealth building. This is how money is made. This is how the wealthiest of the people have made money. They make the most money when it comes to these sort of changes. They don't make money at the top. They don't make money at the bottom. They make it in these high volatility component pieces where there's a lot of uncertainty, and they just have a clear vision of where we're going and what makes sense to do. Some of the stuff is a bit more complex and complicated. Some of the stuff is super easy. I am a complete idiot for a lot of the complicated stuff. I like simple and easy stuff. And so that's why I go in and I invest in simple and easy stuff that it's sort of like a no-brainer to say, duh, I could see how this is going to play out. I am going for it. So that's kind of where I think things are going to happen. We're going to be seeing some amazing stuff that you can buy. All you got to do is just hold on to this stuff and hold on to the cash. Thank you for watching. Until next time, stay forever money blessed. And do remember, you are only one deal away.